now I would say, my forecast for Bitcoin isn't that different. It's going to grow 29% ARR over 21 years to be a $280 trillion asset class and 13 million a coin. That's not that different. Maybe a little bit faster up front. Maybe I'm leaning more toward the base case to the bull case than I was leaning from the base case toward the bear case. So yeah, I'm a bit more optimistic. But I think the big major sea change is you can see $500 trillion of conventional assets getting tokenized to become digital assets. I think the issue is, why wouldn't half of the equity in the world become digital equity? Like, why wouldn't you expect to see Apple stock, Google, Amazon stock trading on your iPhone and your Android phone as tokenized security? And I would think that the path is open for stablecoin, that to go from $150 billion to $1 trillion to $10 trillion.
Michael Saylor forecasts an astounding growth trajectory for Bitcoin, predicting it will evolve into a $280 trillion asset class, with each coin valued at $13 million. His vision hinges on Bitcoin growing at a 29% annual rate over 21 years. Saylor's optimism stems from Bitcoin's unique role as digital capital, distinct from conventional digital currency like stablecoins. He compares Bitcoin's long-term store of value attributes to real estate, gold, and high-quality equity, emphasizing its appeal as a multi-generational asset. Bitcoin, according to Saylor, has entered a new era where its potential for rapid initial growth is more evident than ever. This outlook aligns with his belief that we are witnessing the early stages of a monumental transition in global finance.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
At this point, you define a digital currency, you peg it to the dollar equivalents. Yeah, there ought to be a regulatory environment where a company or a bank, especially in the US, can issue a US dollar-backed stable coin. I think there's $10 trillion of demand for that. I think that we're going to go from $100 billion to a $10 trillion industry in stable coins. We're just waiting for the framework for the digital currency. And as you know, I don't think of Bitcoin as digital currency. I think Bitcoin is digital capital. Currency is the short-term medium of exchange pegged to the fiat currency. Capital is the long-term store of value competing with real estate and gold and high-quality equity and your art, that you're going to give to your grandchildren. I think those two are clear. I think the exciting thing, right, is defining a digital token, right? How about a token in cyberspace that has utility in cyberspace? It's not a security. It doesn't have a claim on real property or on cash flows, but rather it's Tom Brady gives a digital token, and it gives super fans rights to chat with Tom Brady online, right? 10 million people want to comment on Tom Brady's post, but the top 100 super fans, they get elevated to the top, they get into the chat, they get into the 100-person Zoom meeting, they get something, whatever it might be, some prioritization. I don't know why there wouldn't be a million of those different types of tokens issued, right? I mean, the great travesty of the traditional world is 0.06% of the businesses in the US can tap the capital markets. It shouldn't cost $40 million up front and $10 million a year to go public. If you're Joe Rogan or Lex Friedman or Katy Perry or Tom Brady or a $27 million restaurant chain or $1 million a year chain of yoga salons or something, or an influencer or your podcast, why can't you guys all tap the capital markets? And if I tell you it's going to cost you $40 million up front, you're not doing it. But if I said, the upfront fees will be no more than 1%, 100 basis points, and then on a continuing basis is 10 basis points of the amount of money you raise or the amount of money that you have in the capital market, you might think, I can afford to have a 10% cost in order to comply with the laws. And there's 400 million businesses. There's only 4,000 publicly traded companies in the US. If you read Murray Rothbard in the history of money and banking in the United States, he gets to the point where he talks about the creation of the SEC 33 Act. And he says, yeah, it was a power grab by Washington, D.C. in conjunction with the Rockefeller interest to cut out the J.P. Morgan interest in order to create a cartel to limit access to the capital markets to just a set of very large companies that were wired in D.C. We think that's new. That's what he wrote 30 years ago before crypto even came into being. And that's what people thought in the early 30s. And so the point of this really is everybody's been beaten to submission to think that being a public company or raising capital in the public markets isn't for them. You know, it's like, these are not the droids you're looking for. This is not for you, right? You've got the Stockholm syndrome. You're too small. You don't deserve it. You're just a musician. You're just an artist. You're just a podcaster. You're just a restaurant. You're just a single one city real estate developer. This is not for you. This is only megacorps with billions of dollars of assets can go public. Well, I think what the crypto community showed is you can spin up a token for $40 in 4 hours. And if you can do something 1 million times faster, 1 million times cheaper, 1 million times better, then don't you think if we want the civilization to move forward, we ought to establish an ethical framework? What I would say the government's role is to create an ethical framework. I mean, clear, legitimate rights and responsibilities and a taxonomy. Here's your 6 things you can do. You know, if you want to sell a token backed by a bar of gold, well, then you damn well better keep a bar of gold for each token. You got to be audited, once a quarter by an auditor, and you got to publish the audit results to sell tokens backed by gold, right? I mean, something very straightforward. Tell people how to do it. Tell people what the ethical, definition of the thing is. I don't think the government should tell you technically how to do it. And I don't think they should dictate economically, should it be a bar of gold, or it should be a token of a gold coin, or it should be a token of a Spanish doubloon coin. I don't think the government should meddle in how you do it economically. I think, though, for this industry to thrive, the government's got to give you the minimal of rules and then get out of the way. And what happens next is, I think, millions and millions of digital assets will be created. I think that'll bring the exchanges to life. That'll create a renaissance in the wallets. That'll create a renaissance in all the applications.
A pivotal moment in 2024 saw a dramatic shift in the political landscape, with the digital assets community aligning with pro-crypto policymakers. This alliance, Saylor argues, significantly influenced the election outcome, leading to a supportive administration and a red sweep in Congress. The resulting political environment created the foundation for a comprehensive digital asset framework. Saylor underscores how these developments represent a transformative moment in human history, paving the way for a more inclusive and technologically advanced financial system.
Don't get me wrong, I'm sure lots of people will do stupid things and they'll crash and burn. 99% of the companies that start fail, and 99% of the, whatever, public companies have a hard time competing against the Magnificent Seven. Just like 99% of businesses eventually get shut down. But you know what? What percentage of the people die over 100 years? Like 99%? It's like, we shouldn't stop people from living just because over 100-year time frame, there's a high mortality rate for whatever. So I would say what's really interesting here is we jolted from a very regressive, a very depressing timeline to a very progressive, very inspirational, pro-technology, pro-prosperity timeline. And it all happened in 2024 as we were talking. I think the political landscape and consensus really shifted in the second quarter when Trump embraced crypto. The crypto community, I think, was at the end of their rope, where it was pretty clear the current administration was going to continue to wage a war on crypto via enforcement actions. and they had nothing to lose by abandoning, the Democratic Party, and they made that decision. And then I think there was a, atmosphere of lawfare that caused, Trump to decide he would be benefited to ally with the crypto community. And so that alliance formed and got progressively stronger. And I think that changed the political landscape, not just in the US, but it changed it in the world, actually. It changed the course of human history. I think it changed the outcome of the election, right? I think the crypto community support actually was a material force that tipped the election, in favor of the red sweep. And I think we got a red sweep in part because of the support of the digital assets community. So I think that there were really two possible futures, two timelines in March or February of the year. And one timeline, the blue timeline, is Bitcoin motors up as the one crypto asset that's embraced as a commodity by the global community, and then everything else sits, in a gray zone, right? And in a world of uncertainty. And I think the second timeline, the red timeline, is the war on crypto ends. We get a supportive administration, House and Senate. We get a digital assets framework. We get a framework. There's three things we need in a framework. We need a taxonomy. We need legitimacy. And we need proportionality.
Saylor foresees millions of digital assets being created, driving innovation across exchanges, wallets, and applications. While he acknowledges the inevitable failures and missteps within the space, he emphasizes that these are natural growing pains of any revolutionary industry. By fostering an environment that encourages experimentation and growth, society can unlock unprecedented economic and technological progress. He concludes that the shift to a more progressive, pro-technology timeline is an inspiring development. This renaissance, he believes, will empower individuals, businesses, and communities to thrive in ways previously unimaginable.
Please like and subscribe my channel.